Hey guys, today's interview is with Eva Goicochea of Maude. Maude is a sexual wellness and well-being startup based in New York, and Eva's going to tell us how she raised money for it. If you like this kind of content, hit that subscribe button, leave us a nice comment in the comments section, and then email us at info@foundersuite.com. I will send you a list of the most active seed stage VCs in New York, or a list of the most active female angel investors. Or if you tell your friends and leave a really nice comment, I'll send you both of those. So hit the subscribe button, leave us a comment, email us at info@foundersuite.com, and I will send you those lists. Until then, enjoy the chat with Eva.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com. Today I have Eva Goicochea of Maude coming to us from New York. How's your day going?
It's good. Happy Friday.
Happy Friday indeed. Is it springtime in New York, or is it still pretty cold?
So we have a season that we call fake spring, where everyone thinks that there's going to be nice weather and it fools you, and then there might be snow. So we are experiencing fake spring.
That's fun though. Yeah, good. Excellent. Well, great to meet you. Tell us, what is Maude? You guys are doing something pretty interesting.
Maude is a modern sexual wellness company that's going on 3 years old. We'll be 3 years old in April. And it's an inclusive company that's really sort of challenging the industry to think about sex in a destigmatized, inclusive way.
Okay, let's unpack that a little bit. So what are you selling, and then how are you destigmatizing and being inclusive?
So we sell everything from sort of what we call the basics, which are condoms, lubricants, and a vibrator, to bath and body products that are meant to be shared. I think for us, it's really about taking on what is the sexual wellness aisle and transforming it to look like something more modern. And then when I say inclusive, it's that we're speaking to all genders, because we think sex is human and people have sex with other people, and it should be something that they can make a decision on together. So that's what the company really stands for.
Okay, interesting. So what are the top 3 selling products then?
Actually, the basics. So
Okay.
Lubricants, a vibrator and condoms are, which is great because I think it's such a monopolized industry that being a new entrant in the category, I didn't know if we could make a dent in it, and that's what's happening.
And are these products ones you've designed and manufactured yourselves, or are you reselling others' products, or what?
No, so we manufacture our products. It's under our brand. We don't sell any other brands. And it's really a pretty edited assortment. So you won't go on the site and see hundreds of choices. It's really pretty limited in a good way, in a simple way that makes it easy to shop.
Got it. Interesting. And are there unique attributes, for example, to the condom that is different than what you're getting at Walgreens, or or is it the brand?
It's both. I mean, they're easier to open, so they have buttercup packaging, which actually looks like butter you might find in a diner. But it's really easy to open, which is helpful in knowing which way is up. That actually helps with sex ed too, because if you're trying to teach a class, typically you're not allowed to open condoms in classrooms. So if ever they can show Maude, at least they know how to say which way is up, which is interesting. And then we work with one of the best factories in the world. So in terms of quality, we're on par, if not better, than a lot of brands out there.
Got it. Are these sold as subscriptions? You're seeing a lot of these consumer products now sold as a subscription. Of course, Harry's and the Razor guys kind of started that. Or is this more of a one-time purchase? So
we do have subscription, but unlike razors that you probably use every day, depending on if you stay clean shaven, or toothbrushes or anything like that, sex is something that for some people, it varies. It just depends on time of year, if they're dating, if they're married, all of those things. So we do have subscriptions that some people buy into, but I think for the most part, we try to make it really easy to purchase, and whatever your life looks like at that moment, you can go to Maude. So
cool. What is the backstory? Where did you come up with this? What were you doing? What's the founding story?
The founding story is So I actually was at Everlane as an early employee. I was like number 7. So also in sort of the same class as like Harry's and Warby. And I started working there in 2012, and I had come from other brands. So I was working in beauty before that, and then with some consumer brands. But in my early 20s, I was a legislative aide in healthcare. So for me, this was like the convergence of those two things, creating a consumer focused wellness brand. And I moved to New York to get it off the ground and actually raise money, which I think is a good segue into what we were talking about. But I came here and then we launched it a couple of years later.
Got it. Cool. Well, let's segue then. How much have you guys raised? How many rounds? Start with that.
Yeah, we've raised 3 rounds, totaling close to 4.3 million. And, when I got to New York, I knew some people in the space in sort of VC and investing, but not many. And I was definitely looking for a tool that could help me sort of navigate that. And so since 2017, I've been using Foundersuite.
Yay.
Yeah.
Unsolicited plug, but thank you for that.
No, truly, actually. Yeah.
No, that's great to hear. I love to hear it. Believe me, it's been a labor of love for us to create for years now. We're going on. I'm sure, I don't know if you have an iPhone, but iPhone has this new little thing where it's like showing photos from the past, seemingly kind of random, but they're always like pretty good. And I got one from like when we were at Launch Festival, which is this conference that Jason Calacanis used to put on. And it was like, I think it was our launch. It popped up last night when we had a demo booth, and it was like, oh my gosh, just the memories of like that first day of launching Foundersuite, and our product was total crap back then, but it's fun to see. So anyway, thank you.
Well, I mean, I have a quick note. The day that we launched Maude, so we did like a pre-launch a week out, and I stayed up all night with the developer, and I went outside. And speaking of these fake springs, this is actually full circle. There were daffodils on the ground, but it was snowing, and it was April.
Funny.
Yeah.
Funny. That's a vivid memory.
It's a vivid image, yeah.
Cool. Well, excellent. Let's go back to that first round and when you got on Foundersuite. But now talk about putting together that first round. I mean, because it seems like what you're doing would be a difficult category to raise money from. You're going to get a lot of just people who don't want to play in your space. So maybe talk about putting together that first chunk of money. Yeah.
So the first chunk, it definitely kicked off with a few angels and friends and family. I mean, I think anyone who's been through this knows you start, especially if you're doing like a pre-seed round, there's a point in which you're like, I'll take anyone's money. So, you let friends and family in with a few $1,000s. And then I ended up reaching out to this fund called X Factor Ventures, which is specifically female founder focused. And they sit under Flybridge Capital, which is out of Boston. And they ended up writing a much bigger check. So we were supposed to raise 250K, we raised 550K. And they came in for almost half of that. And it was a big deal. It felt very validating. But yes, to your point, it was hard to raise in this space. It's not that anyone thought that Maude was a bad idea. I think it was that it felt nascent. I would say it still feels that way. And you're proving the category out. You're kind of one of the first and few. And so that was the challenge. And then, of course, there were people who were interested, but there were LP restrictions.
Yeah. Was it, let's talk about that. Was it literally restrictions like they cannot invest in alcohol, tobacco, sex products? Yeah. Was it just the sex nature that is totally verboten?
Yes, exactly. So there was a vice clause exactly. There was a vice clause for a lot of them. And so, but it was an interesting round because I got to know so much of New York's venture scene. And I think it was helpful in sort of mapping out what I wanted the future to look like. And so there were a lot of no's, but still I made great relationships and yeah.
How did you identify then folks that would be, that didn't have a vice clause or that would be open to this type of thing? Was it, like you mentioned, X Factor, kind of female focused funds or female focused investors? Was that a theme you focused on?
No, actually, interestingly enough, it was harder to raise from female investors because if they brought this category to the table, I think for them it seemed like a much bigger risk. And what I will say is that generally speaking, I think female investors are expected to win more. than male investors. And so when they're going to bat for something, they want to be 100% sure. And that was an interesting sort of realization, was that like, oh, these investors want to invest in Maude, but they can't take that risk. So
that's interesting. Huh. Okay. Very interesting. I guess let's go on to the next round then. So after the X Factor round, was there another round in between there, or was it straight to the most recent seed round?
No, there was a seed round back in 2018. I think we closed it in 2019. I can't even remember at this point. And that round was interesting because we started raising about 3 to 4 months after launch. And then suddenly we had interest in a pretty big lead, and it became a priced round, but we were so young. And so, I mean, we're still very young, but it was like really early. And I ended up turning down a $1.2 million check, which was interesting. I fought long and hard for it, but at the end of the day, I thought this wasn't the right move. And so I ended up putting together a $1.5 million round with some great funds, actually. But that was a tough one, because I thought I was going to just accept the money. And then I looked at the terms and said, this is too early and these are onerous and I can't do this.
So let's get into that a little, because that's really interesting. And I think a lot of startups, when offered money, especially if it's been a hard battle to get any money, just grab whatever money. So whatever you can share, in terms of like, you don't have to name the name, but what were the terms? What gave you that cold feet there on taking that 1.2 check? Yeah.
A lot of it was related to sort of management, right? Like there was the board seat, and there was sort of some of the terms that were baked into how they, because if they basically wrote the whole round, then you're talking about really having a majority investor. And I think that given that we were seed stage and at that point, like 5 months old, I just thought that was just too risky to do that right out of the gate. And so we ended up just taking smaller checks, even from funds, but those checks were like $250K, not bigger.
Would they control the board? Was that like the biggest factor? They would control the board after that seed round, basically?
Yeah, they would have had a board seat. I would have I would have been able to put a friendly on and have like a 3-person board seat, if I can remember correctly. But I think for the most part, it was just like, they're going to own, if they take this whole round, they're basically buying like whatever percentage. I think I want to say it was like 20% of the company, and that just felt too early, too quick.
Mm-hmm. Okay.
Yeah.
So what was their reaction when you turned them down? Or was there anything, or it was just like, hey, whatever?
No, I think it was a bit heartbreaking on both sides. I mean, I had gone to London. These were investors out of Europe. We spent a lot of time together. They came out and spent time here. It was really like actually a very thoughtful fund and great investors. I really liked them. I just felt like it was, no matter who had offered that money and those terms, I would have said no.
Yeah, interesting. Were you able to wrangle them in on the subsequent round for maybe a smaller check, less control, or do you just kind of break ties there?
I didn't break ties socially, but I definitely didn't. I mean, what's interesting about the third round is that it was also considered a seed round. And I think a lot of investors, I could have, again, we were early when we raised this round as well. And I think investors in the seed sort of range, they don't write multiple checks typically. So it was an interesting round to get done, because we weren't ready for an A, but we were having so much traction that we could use more fuel. And so,
yeah. What were you pitching at that seed round? You said you had basically just launched. So was it mostly vision, a little bit of traction, or, yeah.
That's exactly what it was. It was traction. It was vision and traction. I mean, we'd really spent a year before we launched the company getting a lot of great press and having an early user base. And so by the time that we launched, we were able to speak to those metrics. But I think, I thought that it was an interesting spot to be in. I see other companies now who raise a seed round before launch or right at launch, and they just go for a few million, and they don't do it the way that I've done it.
This is one of these really hard, really challenging parts of startups, is like understanding control, dilution, board seats, and optimizing all of that in the context of like how much money you need for a business, right? Like that's, yeah.
And the dynamics of all of the investors together and like who's who, it's you're managing personalities and expectations while simultaneously trying to run the business. And I'm a solo founder. And so it's a lot.
Yeah. Interesting. Okay, good. Well, unless there's any other anecdotes from that one, let's go to the most recent seed round. Is that right?
The most recent seed round. So this was supposed to be an insider round. This was supposed to be going back to the old investors and saying, let's just throw something together, maybe get $1 million. We're doing really well. And suddenly it turned into bringing in new investors who were really excited about Maude. And so we were going to raise $1.5 million. We ended up raising 2.2. We got Dakota Johnson in as our co-creative director. I mean, it turned into sort of a much bigger deal than it was supposed to be, all while closing in COVID. Yeah. So everything I learned through that process was definitely unique to this time.
So 2 questions. What made it change from an insider round to sort of a more open round, whatever the phrase there is, and talk about raising in COVID? Maybe start with that first question. What changed it from insider to open?
So the profile of the business when I started raising was very different from the profile like midway through, because we actually were growing so quickly. At the beginning, we put together almost $1 million very quickly, and then COVID hit. And so that other 500K was getting harder and harder to raise because everyone was saying, look, we got to pull our, purse strings and make sure that we survive as a fund and that we are here to capitalize the companies that aren't doing well, and you're doing well. So like what, maybe you can figure out other ways to fund the business. I could go all day about working capital and the challenges of that. But anyway, so then we ended up getting a much bigger fund who was interested in Maude and came in sort of at the end. And the profile of the business was so different. I mean, we did so well during COVID. We couldn't keep anything in stock. We had it was bizarre because it was like, if I knew then what I know now, I would have raised maybe a higher valuation, and I probably would have just waited so that we could have gotten it done quicker.
How funny. So are you saying that just like with household goods and like vegetable seeds and all the other stuff that, quickly like had its sales just spike, that sexual products during COVID also took off because I guess everyone's stuck at home?
Yeah, I mean, it was fascinating. I think one of the big pieces of that was how much our content started to take off. I mean, we saw so many more visits to the site just on the content side. And I think, people were faced with living with their partners 24/7, or maybe being solo, or, trying to navigate dating. I'm not even sure how that was possible, but, and so, and actually from the perspective of understanding our customer base, we always knew that they sort of lean more single or married versus dating. And that was proven out last year. It was like, obviously people aren't really dating right now and the company is blowing up. So
where did you, not to get too tangential, but where did you see all the growth from? The single people, the dating, or the married? Because I heard this morning, that there was expected to be a baby boom during COVID that actually didn't happen. Like people expected all these babies to be born, given the pandemic, but like the opposite happened. I don't know. So, which
is weird because I feel like I know so many babies that were born during COVID.
Funny.
I don't know what happened. No. Yeah. I mean, I think it actually had to do more with like people's, just the ability to have more flexibility in their, in their day and time, because we typically see a lull in the middle of the day because people are not shopping for Maude when they were in office, and now it's like throughout the day we're seeing traffic.
Oh, funny. Interesting. Sure. Cool. All right. Well, let's go back to fundraising. So it's most recent round. So this was a price round, and so who led it, and maybe talk about putting together the target list and all that good stuff.
So it actually wasn't a price round. This was also on a safe. The middle was priced. This one was safe. The lead was actually one of our existing investors, technically, called Cassius. They're great. They're a consumer fund. And here, they have presence sort of all over, but the biggest check-in was from True, and True is out of the UK. They're in London. Great consumer investors, understand the global marketplace. And they're the ones that came in for the bigger check that kind of kicked us up to 2.2. And as we have sort of plans to go into the UK and abroad, it was a really great partnership for us.
And the other one was called Cassius?
Cassius, Cassius.
Oh, okay, interesting. I haven't heard of them before. If Crunchbase is accurate, I see Vice Ventures. Are they focused on like Vice startups?
Yeah, they are. So Catherine Dockery is an incredible investor. She came from actually working under Andy Dunn and was at Walmart with Bonobos. And then she started her own fund. And so she specifically focuses on Vice, which includes alcohol, tobacco, sexual wellness. Yeah.
Makes sense. Talk about raising during COVID. So that was the second part of that question. What changed? Obviously you're probably doing it all on Zoom. Did you adapt your pitch? Anything you want to share about raising during COVID?
Yeah, I think that it was definitely easier, to be honest, because you didn't feel like you were running around town. I mean, that's literally what was happening when I raised the other rounds. I was like taking meetings all over, and I was able to focus more, be on Zoom. I think nobody wants to hang out on Zoom, right? So the meetings were more efficient. I think that we pretty much got to where we needed to go with each interested investor much more quickly, which was nice. It felt a bit more straightforward than the other rounds. There was still some song and dance, which always happens when you're raising, but everyone's like in their living room. Yeah.
Did you raise from anyone who you did not meet physically?
Yeah, true. I've never been to their office in London. So in fact, we now have we have a fractional C team, like our finance team, and we have a merchandise and planning team. I've never met them.
Oh, interesting. Yeah.
I know.
Yeah, I'm hearing that because now we're almost basically a year into this, right? So, and we've done a bunch of these recordings during it, and you're hearing actually kind of the same sentiment that, sure, it sucks to be locked in, but the fundraising has kind of gotten more efficient for a lot of people, able to do more meetings, kind of condense it all a little more efficiently. And so, yeah, we'll see how that changes. It'll be really interesting to see how that changes if we go back to like the old way or some hybrid, right?
I think that it forced us all to be more prepared online. Like I do feel like there was maybe something to be said for expecting some sort of, I wouldn't call it chemistry per se, but like you meet a fund and they're trying to suss who you are as a person, suss out who you are as a person and as a founder. There's a lot that's happening with things that are unspoken in terms of how they're testing you and seeing it if they believe in you. Well, on paper, digital paper, it's a little bit easier to say like, look, this is what we're doing. It's pretty straightforward. I don't know. I think it saved a lot of the back and forth that to me wasn't really additive before.
Yeah, I don't know. I definitely miss, I just think of our investors and there's a good personal chemistry that I'm trying to imagine if I had done it all on Zoom, how that would have played out. And it's hard to imagine that because it's just that sitting down and having breakfast with them cemented things, I don't know. We'll see.
But I think in the reverse, like when you're pitching, and I've heard this a lot from founders who are going out for their first raise, and this is like pre-COVID, the problem with it, it's almost like dating in a way. The problem, I haven't dated in over a decade, so I don't know, but the problem is that you think that it's going well because you're going off of so many other cues in person. And now it's kind of like, I don't want to say it's more transactional, but in a way it is. And it's maybe a good thing because you sort of value the time where you stick to like the 30 minutes, you get through your pitch, they can ask questions. You're also typically sharing the materials digitally. I wouldn't say that I had any pitch meetings where we didn't go through the materials right away, as opposed to like the coffee and the breakfast and then the pitch materials. And then, so.
Touch on that for a minute. So like now when you have a pitch meeting, are you kind of just jumping straight into, or is there any revised structure of how you're sort of sharing data that's different now?
Yeah, I mean, I definitely go into the meetings and have the presentation like ready to go, or have my talking points ready to go, and we'll just show them. I'll share my screen and just walk through it and just take answers. And I think that efficiency has been really helpful in seeing who is right and who's not. Got it.
Okay. And since we're talking about efficiency, how have you been using Foundersuite? This wasn't prompted or pre-planned, but I'd love to hear any just best practices or things that you've been able to use from it. Yeah.
Yeah. So I think when I first signed up, I don't know if it was completely built out yet, but sort of finding funds wasn't, when did you guys launch that part of it?
Yeah, a couple years into it. So originally we were using AngelList API in the early days, and then they shut down their API. So we started to build our own database, but it was pretty lean in the early years, probably 2017-ish.
Yeah. Okay. So when I first started using it, I wasn't obviously using that feature as much. I think through these raises, it's been helpful in cataloging. So I've used it to manage every raise, every conversation I've cataloged to say, these people told me they're better for a Series A. Okay, we all know that sometimes they're just BSing you when they say that, but that's fine. Because you can add all of the notes. You can put in who you met through, who you've contacted. And what's also nice is I've used it collaboratively with other investors who are helping us raise. So I'll give them access, and then they can go through and put in their personal notes. And I think it's led to much more honesty about, because you sort of get this back channel like opportunity to get notes from people, and then you don't waste your time reaching out to, a fund that might not be the fit. So
that's interesting. So your previous investors, for example, will work with you, and maybe they're adding notes like, hey, these guys really don't want to play in this space. And that way you're not wasting the time kind of pursuing those targets that you've identified. Is that right?
Yeah. And then I use it also specifically to email my investors the updates.
Okay.
And I find that to be, I want to say almost all of them have given great feedback around feeling very tuned into what's happening with the business. I definitely, for as many as, investors as I have, which you can see in Foundersuite, I don't really have any that give me a hard time because they're getting this really organized, like well-documented update every quarter.
That was my next question. How often you do the updates? So it's quarterly, and is it pretty much the standard metrics? Like, what are you including in these updates? Any tips on that?
So we're a team of 7, almost 8, and everybody in the team gives me their update for their department or their sort of their channels. And then I will put that together, and that's what I send out to the investors. So everyone gets a chance to sort of manage their own KPIs and say what's happening in their channel. And it's just the highlight reel.
Oh, cool.
Yeah. And then because we send it out to almost all of them, we don't put in all of the sort of information that I think should really go to major investors or be kept within the board. So we use this to facilitate communication, broadly speaking, and then we'll send other investors like the materials that they've requested via their agreement with us.
Do you do any, what I call kind of pre-marketing to investors, like investors that say, oh, we really do Series A or Series B? Do you sort of nurture those along with investor updates? That's one of the tactics a lot of people do.
Yeah, we do. It gets a little bit tricky. I mean, I think you could probably do like an edited version of your update to get to these people. I am a little fearful sometimes of like what data is going to who, because everybody knows everybody. But yeah, I think that it provides a great way to do that, to sort of create an edited version of like what the updates were. And it also is for investors I've been in the final stages with, it's a great way to say, look, I've been giving, investor updates since day one. You can read the entire trajectory of the business via these updates, and they feel like you're well organized. So it's truly helpful.
No, that's awesome. All right. Well, I'll stop with the commercial endorsement here. I appreciate that.
No, I endorse the product with or without you asking, because a lot of people use like Excel sheets, and because it's not hyper collaborative and not always, it doesn't do a lot of things. Excel sheets, that is, I think that I've always like used this tool.
No, appreciate it. Very cool. Any other just other fundraising tips or things that worked well for you along the journey? Or even the question I ask is, any advice you would give your younger self, as you're embarking on this, if you do it all over again?
I think one, and you sort of brought this up a little bit, which is to nurture the relationships, because there are definitely, sometimes it can feel like people are just telling you what you want to hear. I have now found that there are a lot of investors who said, we want to keep in touch with you, and they truly do as you go along. And so that's one, is like fostering those relationships. And then 2, it's definitely just finding the right people for the stage of business that you're at, for the type of check that you're looking to take, and then for the type of business that you are.
Yeah.
You know, everyone kind of gives each other advice like, oh, they invest in consumer or they invest in SaaS. And it's like, but do they invest in your category?
That's one of the hardest things about it all, though. And I think one of the biggest complaints I get is like, founders have a hard time pinning it down to like your specific stuff. Maybe they do, broader categories, but like any tips for just like really narrowing it down, or is it just kind of digging into their previous investments and things like that, or what?
I actually think, yes, that's exactly what it is. It's digging into their previous investments and seeing where there might be crossover so that it's not the right fit for you, because you don't want to. And then also you don't want to be telling them information if within their portfolio is potentially a competitor, which sometimes is not so obvious because what you might think is competitive, they don't, or vice versa. So just knowing that, like, I had a lot of investors sort of lump us into feminine care quite early. And I was like, we have no plans on going into feminine care, even if there are brands that include sexual wellness in their assortment, but they're fundamentally feminine care brands. We're for everyone. We're just going to be sex. So I actually think they're quite different, but there were some people felt like it was restrictive and they couldn't invest in us because of that.
I see. Are there other, last question or two, are there other venture-backed companies in the sex space? I can't really think of any, but you know the space really well.
Actually, there are a few of them, and they mostly focus on sex toys. So we're kind of if not the brand that has the assortment that we do that includes condoms and that is gender inclusive. The others index either, there are some there are actually a couple now that are like just condoms or just lubricant. So they all sort of have their specialty, and we kind of sit in the middle.
Got it. Cool. Excellent. So let's make the plug for you guys. If people want to learn more or purchase, it's getmaude.com.
Getmaude.com, MAUDE.
Yeah. MAUDE. Anything you want to promote or plug or call attention to?
We have a really big drop coming in a few weeks. So a product drop. So pay attention.
You want to tease it, at least what category it is, or?
I can't.
You can't?
No, I will just say that we've been getting asked for it for a very long time.
Interesting. The mind runs wild with what that could be, but
yeah.
We'll leave it at that. Excellent. All right. Well, thank you so much. Getmaude.com. Check it out. And we'll catch you after your Series A round, see how things have shaped up.
Thank you so much, Nathan.
All right. Bye.
Bye.